Hey everybody, this is Jose. I am back here. Could you please confirm that you hear my voice? That would be good for me to know, so I know we are well connected. Yeah, perfect. Thank you so much. Okay, so we're gonna restart. Okay, after this little hiccup, let me turn on my camera one more time. Hello everyone. Hello again. Sorry for that. Got a power problem in here in my area. I don't know why it happened the way it happened, but really the timing was not the best, isn't it? Anyway, so let's get restarted, okay, and try to take still advantage of our session and time together. Again, apologize for the issue, but not much I could have done, and we have trades to take. Okay, so we're gonna continue. Hopefully, you guys are still around, and we'll be able to catch up. Anyway, so let's go for it. Okay, so we were looking at IBM. We were looking at the fact that IBM had earnings that in one website was showing us being on was it what was it January 22nd, I believe, and then Dirk was pointing out the fact that IBM was showing earnings to be on January 15. Okay, so I was commenting when I got disconnected that sometimes this happens when we use free websites or even sometimes paid source of information where we have differences. Okay, so what I wanted to show you when I got disconnected is, if you don't know, okay, at any moment in time you don't know what is the right expiration date to use, or you are not sure, the you know the best way to approach it is don't take the trade. Okay, that if you have uncertainty and you don't have a way to find out what is the right piece of information, then simply don't take the trade. Okay, now one little trick which I want to show you, but I'm realizing I'm going to have to wait 7 minutes to show you when the market opens, because now it's all zeroed out. It's to look at the information related to implied volatility, and you will clearly see the expiration date where earnings are reflected. You will clearly see the largest number when it comes to implied volatility, and that's how you would know, kind of find out for sure what is the right date to be used. Okay, but anyway, we'll have to do that later on, because right now it's 3:20, it's 9:24 a.m. in New York, and therefore, as I said earlier, 10 minutes before the open, option chains are zeroed out, and therefore I cannot do anything now for non-directional purposes. Okay, so let's spend the following minutes looking at directional trades, and once the market open, we'll kind of restart where we left before with that little hiccup. Okay, good. Anyway, so directional. Okay, we're gonna start with directional long. The scanner reported 7 opportunities. Directional short, the scanner reported only one. So you know what? Let's start with that one because it's one. So it's gonna be quick. It's gonna be a quick one. So what do we have? Well, we have an opportunity here where we got a climate going down. We can see that clearly with a red colored dot, and that climate is supposed to last 5.69 candles based on stats, where currently it's been already taking 6 candles, and when the market opens it's going to be candle number seven. In other words, we are now entering the territory that we call hopeful. Still, again, we always like to give ourselves a little bit of wiggle room, because especially when a market starts picking direction, typically you will surpass by a little bit what statistics suggest. Statistics are very relevant, but also quite conservative. So normally we allow ourselves to take trades in that direction still, for an additional 50% of the time. In this case, 5.69, you will round up to 6, and 50% of 6 is 3, and 6 and 3 is 9. In other words, today is going to be candle number 7. You would be okay taking trades up to candle number 9. Okay, so it's still okay to take the trade, but remember, the moment you surpass number 6, because we fall into that hopeful territory, then we like to execute those trades with half of the size, because of course we have a little bit less probability, so we also play with the size in that sense. Okay, now problem with DD is that using pre and post market data, we got stats that suggest 43%, and that is not acceptable. So if I switch to regular session, okay, now we do have stats that point at 52.91% of the times those UFOs would work according to plan. In other words, it seems that using regular session data, those larger market players, when they don't get all their orders filled, they do leave them in the market until they get filled, and that would be 52.91% of the times. Okay, so that is giving us an edge together with the climate, and therefore we would be looking for entry points around 63.99. That's the average price. Of course, this will be updated in 3 minutes when the market opens. My screen is still showing IBM. That's weird because I do see it updated on my end. Would you mind to maybe refresh your YouTube? Everyone else, could you please confirm if you see IBM or you see DD on the screen? I'd like to ask for this confirmation because everything looks okay on my end. Again, the problem I had was with the power outage. It is DD. Okay, got it. So, Dirk, you would want to refresh your YouTube. Something got stuck on your end in this case. Got it. Perfect. So anyway, so we would want to have an entry point around 63.99, which is the average price, and therefore we need to find a UFO around that price point, which we do. We do have 63.93 to 64.07. Certainly lines up very nicely with the average. Okay, so if I zoom in, to be precise, we are talking about an entry point around 63.89, which is the bottom part of the UFO. Okay, so we do have a proper climate, we do have a proper entry point. Therefore, let's go ahead and put the whole plan in place by following the steps that we normally follow, which is first climate. We talk about it. Second target. Let's do target. We didn't do the target, so I'm gonna activate AutoUFO on the daily time frame. Let me maximize the chart and find out where my target would be. Okay, we don't have anything green at the moment in time, which may mean I need to load more data. Okay, so I'm looking at the monthly time frame, and the monthly time frame would suggest that we may need to load data all the way to 2000, either 2015, September 15, and if not, we need to go back all the way to 2013. Okay, so to see the data below price. Okay, so I'm gonna go ahead and first load data using the daily time frame. I'm gonna load data starting September. Did we say September? Was it September? Let me see. Yes, September 15. So I'm gonna start with the daily time frame loading data using September 1st, 2015. Okay, and if we don't have any UFO there, okay, so we're just gonna have to wait just a little bit. Okay, if we don't have any UFO below price, we do have a UFO below price right there. Okay, then so that would qualify as our target. Okay, so that UFO is located. Oh, the market just opened. Very nice. So that UFO is located at 59.86. Okay, so 59.86. That would be our target for DD. Okay, so anyway, disable auto UFO, and actually we don't need this huge amount of candles anymore, so I'm just gonna go back to my normal amount. And also it seems that TradeStation has switched to candles. I just want dots. Okay, here we go. So we are back to normal here with our climate chart. Okay, good. So let's go for it. Okay, let's go for it. We know we got a down climate. We got 63.92 is the updated value for the average. 63.92 certainly falls nicely within the UFO. So one more time, we have a valid entry point. Our target is way below, located all the way at 59.96, okay, which is more or less down here. Okay, so we are expecting this down move going all the way to that bottom part, and that's what we are shooting for. Okay, cool. So with all of that, let's go ahead and plan our trade, which would be a trade where we would be buying a put somewhere between entry and target, okay? And we're gonna be selling a put below, so sell a put below, okay, which is gonna be beyond the target price, okay, which is again target price is 59.96. Okay, so this is what we want to do. Okay, this is what we want to do. Now, of course, the first question that comes to our mind is also, so what expiration data we're going to use to do that? And this is when the time to target calculation comes into place. Okay, so what is the time to target? Okay, well, the time to target calculation, TTT, is the amount of time that we expect it will take for price to travel from entry to target. Okay, and how do we do that? Well, we grab a calculator, we input our entry point, which is 63.89. That's going to be our entry point, isn't it? We look at the distance between the entry point to the target point, which is 59.96. Okay, and now we become aware that we are shooting for a travel of $3.93. Now, when we look at the average true range of that particular stock, which is 1.2264, as you can see, 1.2264. If we were to take 393 divided by 1.2279, this is telling us that it's going to take 3 ATR, and because we're giving ourselves a 1 full week for a daily ATR to be produced for us, so that would be 22 days. So we need to use expiration dates of at least 22 days for DD. And this is also, we also need to take into consideration the earning dates for DD, because really we certainly like to use that expiration date as it would minimize the impact of time decay. Okay, but now I believe we may have a problem there. Well, actually, maybe not. Yeah, because January 29 is the expiration date. So you will want to use January 29. You got 24 and 31. So 31 of January would be the one to use. And remember, we said 22 days, where 31 of January is giving us 35. Certainly 35 is more than 22. So we do have enough time to target. And therefore, 31st of January, that is going to be the expiration date to be used. Okay, so we're going to be using 22 days. That's the time to target. But in the end, we said we're going to be using, the expiration date to be Jan 30, 2020, because the earning date is Jan 29. Okay. By the way, no matter the expiration date you use, we need to be out of the trade before earnings. Okay, so we're going to use January 30, but January 29 or before, you need to be out, even if you didn't reach the target. Okay, so here we go. So by the way, we are basically entering the UFO, so we need to move quickly to put this trade in place. Okay, so let's go ahead and right click anywhere on the put side, which is the right side, analyze and buy a vertical spread. So we're going to input this vertical spread on our analysis tab, so we can go ahead and adjust everything we need to adjust. Okay, so again, first let me confirm that we got 31st of January 2020. That is confirmed. Let me go ahead and add another price. Actually, I don't need to add one. I got another one. So we need to add price slice, which is 63.89. That is the entry. We need to also add the target, which is 59.96. Okay, 59.96. Okay, we got everything we need. And therefore, let's go ahead and pick the put that we sell to be beyond the selling point, the target point, which is 59.5. That would be beyond 59.96, isn't it? By doing that, and now knowing that 63.89 is our entry point, we also want to pick an option that provides that is located anywhere between the entry and the target. And in this case, we are looking at 63.5, which is indeed a little below the entry 63.89 and is certainly above the target 59.96. Okay, so the setup that we have here below makes sense. The question now is, do we get the Greeks that we need? And the answer is no. The delta is negative 18, and that is too little. We need at least negative 30. So this could be done by either rising the put to 64. If I go to 64, I'm going to get more delta, as you can see. But now I am invalidating the rule I gave you earlier, isn't it? Because on the chart, we wrote that this put needs to be between entry and target. If I use the 64, I'm actually buying a put above. So I'm not going to do that. Therefore, the only way I can get more delta is by lowering the put at the target to 59. Now I got 20, still not enough. What about 58? Now I got 23, still not enough. What about 57? Now I got 33. What if I do 57 and a half? Now I got 32, which is the closest I can get. So that is valid now. Okay, that is valid now because I got 30 delta at entry, positive gamma at entry, and also positive gamma at target. So my first impression is that this would be valid. Now, of course, I need to check the difference between doing the spread using the 63.5 and 57 put, which is what I just did, compared to only using the 63.5 put if I was to analyze and buy just a single put. Okay, just a single put. So if I was to analyze and buy just a single, right here, if I was to analyze and buy just a one single put, okay, so notice I am comparing 63.5 and 57 compared to 63.5. So what would this do to me is it would cost me 216 instead of 172, okay? Now 216 would give me 44 delta, okay? So if instead of 63, I was to use something a little lower, such as, let's make it 63, 62.5, 62, 61.5, now I get more or less the same amount of deltas. Okay, so now this trade would cost me 125, the other trade would cost me 174. They get more or less the same amount of delta. Okay, they get more or less the same amount of delta, 31, much more gamma, 6 and 7 gamma, where if I do the spread, I get more cost, 174. I got the same delta, but less gamma. Okay, less gamma. Now, of course, I also have less pain based on the time decay. I'm losing $1 a day. Where if I do the long put, as you can see, I'm losing almost $3 a day. So it really depends on your preference. If you don't really care much about the time to expiration and you are very confident about this move to take place, then buying the 61.5 put would make more sense. Okay. But to be honest, in this case, 61.5, it's really far away from the current price, which means that you need to be right for a long time for that put to not to suffer much time decay and become in the money. So in this particular case, I do feel that using the spread, which is the 63.5, 57.5, does gives us a better benefit, and therefore this is the trade that we are going to take. Okay, so I'm moving quite quickly, especially earlier I had a little bit of a technical issue, so I don't want to waste time into this session. Hopefully it's not too fast. If it's too fast, please ask me and I'm happy to repeat. But basically, I'm going to enter this trade. So I click on trade. I am ready to buy this spread. If you do it at the midpoint, it's going to cost you 175. I would certainly suggest, you can see the natural price is 337. So there is some, let me go back to the option chain and you'll see what I mean. This is not the most liquid option in the world, 337 to 0.14. So if I look at, here we go, if I look at the options chain, right, and I look at the 63.5 put, well, notice the pain that we can see here, 89 to 3.5. My friends, let me tell you that I'm going to rectify the plan of this trade, because notice how crazy the spread is for the 63.5 strike, where the 63 strike got a much healthier level of spread. The difference between the bid and the ask, 165 to 194, is much more reasonable than 350 to 090. Okay, so I didn't notice that earlier. Now that I'm about to place the order, I'm noticing this, and this is giving me an opportunity to go ahead and rectify my trade. Instead of using 63.5, I'm going to use 63. That's going to penalize a little bit my delta to 28, but I'm going to fix it by dropping this to 57. And that's bringing me now to 27.75, which is, let's call it 30, is what I want. I still got positive gamma, and positive gamma, no matter if I am at entry or target, Okay, and this trade is now worth it 141 with a much more reasonable spread. Okay, so that is the other benefit when you are about to place an order. You normally, to be honest, I do it here when I look at the ask and the bid, the ask and the bid price, and I look at the mid. For whatever reason, since I was kind of moving at a certain pace today after the technical issue I had, I didn't notice at this moment in time. I just click in the wrong place. But when placing the order, that's when I was able to realize the little problem that I could have when placing an order if I was not to realize the spread. Okay, so always get into the habit of looking at the mid, the bid, and the ask prices, and if any, redouble check here with the two cells on the left here, mid and natural, because this is basically where I raised a flag earlier. I missed it on the first screen, but I did notice it here on the second screen. Okay, so that is now more reasonable. I mean, we know DD is not the most liquid stock in the world, but that is more reasonable, isn't it? So I'm gonna go market with an activation rule that tells me that if DD rallies at or above 63.89, by the way, we are just hitting the entry point right now as we speak, so it's time to take this trade. Okay, so click OK. Okay, so go ahead and take this trade. So place order, quick verification. We are buying the 63 put expiring 31st of January, selling the 57 put expiring 31st of January. We're doing it now only if DD is equal or above $63.89 per share for the underlying stock. The answer is yes, I am willing to take this trade. The order has been placed. I got the order here in the manage. Okay, it's 86 right now, as you can see on the top, so I'm not being filled. But if that stock rallies to 89, we are 2 cents away. You will see my order here that has been received. Okay, my DD order that has been received will get filled at the moment we reach 89, which we have done a few seconds ago, and I would say we can still very likely do. Okay, anyway. Hopefully I was not too fast. I'm aware I was moving at a quite decent pace. If you are entering this trade, let me know. I'd love to know. No matter if it's paper money, real money, I'd love to know what you're doing on your end. Also keep in mind, what we discussed in the past. You need to know your risk to understand the amount of contracts. I'm using one contract per trade just to make it mechanical for the sessions when we are trading together. But remember, this trade has a risk of around $140 per contract. So let's say you want to raise $300 per trade, then you would use 2 contracts. Okay. If you were to use one contract, then you would have a risk around 140. I mean, to be a little more precise, 142 something. That is the theoretical value. Okay. That's more or less what the price of that option spread should be when you hit your entry point. Okay. So we'll see that later on when I get filled if that's the case. Okay. Anyway, ready to go for trade number 2. Little confirmation there from your end, guys. Is everybody okay with the trade? Any comment? Any question? So we ended up buying the 63 put and selling the 59. Sorry, the 57. That was the plan. 63.57. Any question out there? Everybody good? I am about to get into the next trade, but again, I'd love to know if there is any remaining question. Seems to be good. Okay. If you guys are doing okay, just please state I'm doing okay. Okay. It'd be good for me as well to know that you guys are following. Maybe it's simply that you are busy placing the order, and of course you want to be focused now, which you do well if that's the case. But in any case, when possible later on, give me some confirmation if that's okay. That helps a lot on my end. Okay. Anyway, so going up a little bit, 4 cents away from entry. So hopefully we'll have a little bit of a push and we get filled. Okay. Anyway, so let's switch from directional shorts to non-directional. Earlier we started talking about IBM. So let me show you the little trick I was referring to earlier when I said, let's say you have 2 sources of information that are contradictory. One source tells you that the earning dates are January 15. The other source tells you the earning dates are going to be January 22nd. Okay, so how do you know that? Okay, well, you would know that by looking at the options data. Okay, so for example, notice how January 17 shows implied volatility of 14, where the greatest value for implied volatility is located here with January 24, which is 23%, which is way more than 14%. So what this is telling me, that, probably, very, very likely, Yahoo Finance, okay, is right when compared to Earning Whispers, okay? Because if Earning Whisper was right and January 15 was the earnings date, so then this January 17 expiration date would have a much greater figure when it comes to implied volatility. Okay, and this, by the way, it's nothing new. I said it multiple times in other sessions that we did in the past, that my own experience is that many times Earning Whisper has been a little off, not in a major way, okay, but just a little off compared to other websites. That's why my preference here, it's actually to use Yahoo Finance. Okay, there are more reliable sources of information, such as using, for example, the data you find inside of Thinkorswim, things like that. That would be even more reliable, but that is paid data. Okay, so that's if any, or let's say you're on the go and you don't have Thinkorswim installed, if you were to be a TOS user, so you can always use that little tip. Okay, it's nothing magic, but certainly gives you a bit more guarantee. And keep in mind what I said as well. Worst case, let's say you are still unsure, whatever, so don't take the trade. That's it. You have to be sure. You have to be positive on the data you use when you plan a trade. Okay, and since that we got filled on the trade. Okay, I have not got filled yet. Deer got filled at 136. I believe that's a good price. You got a good price there, Deer. Yeah. In my case, it's still showing 84, 83. Of course, mine is a simulated account when we do the sessions together, so it's less reliable, as you know, especially with options. Okay. Cool. Anyway, let's keep going, guys. I am eager to find a collection of trades here. So let's keep going. So IBM. Okay, so we were talking about IBM. Earlier we said IBM is not good when looking at regular session data. When looking at pre and post market, then IBM is giving us 49. That is okay. Okay, and that may be valid for us to plan on trades. Okay, now for me to plan on non-directional trades, I need green UFO and red UFOs. I need both, the green and the red, and therefore I want to see how far in time I need to go to find green UFOs that seem to be located somewhere around January earlier this year. Okay, so let me go back to 55 minutes, but I'm going to have to load data all the way to January 1st to get to see green UFOs on my screen. Okay, more than one. We need a minimum of two, isn't it? Okay, so here we go. We should be fine now. If I drag this up, we should be able to uncover green UFOs. Oh, yeah, okay, got it. Well, look at the distance to that UFO. Okay, so let's not waste our time. Okay, I'm just gonna pass because of course you can certainly sell puts down here, but you're gonna get paid nothing, and therefore the trade is likely not to be worth it, and we're gonna be just wasting our time with IBM for this trade. So we're just gonna go for the next one. Okay, so IBM we're gonna pass. LQD, of course, that is an ETF, isn't it? So we're gonna pass on this one. PG, Procter and Gamble, more than $100 per share, could be a valid candidate. So let's take a look at the earning date for PG. We got January 23. Okay, so that's good. It's giving us some time. So let's take a look at what is available with PG. We got a little bit of pending data there. I believe, if I'm not mistaken, I don't remember everything by heart, but I think that stock was making all-time highs. Yes, it is. So the concern here will be when the chart finishes loading, the concern will be, do we have two red UFOs above price? So when the chart is making all-time high, so here you can see we have one. Okay, that's not enough. We need at least two. So what if I move to regular session? Well, we got 47% and still is only one. So yeah, we don't have a good setup with PG. So we're gonna move to YUM. So YUM Brands, YUM. So looking at it, YUM Brands is giving us February 5 for the earnings. So that's nice. So now let's take a look at what's going on there. We got 55%. What if I switch to pre and post market? 45. That is not enough. That is not enough. And it's a shame because if I switch to regular session, certainly nice 55%. But again, the problem will be that if I start selling options above 118, because I need two UFOs, right? So I will need to target 118. Well, basically, I'm gonna get paid nothing, and that's not gonna be good. Okay, so it's too far, and I'm just doing this visually, if you wish, but you can always go ahead and do it manually, and you would see how what I said makes sense. Okay, and by doing it manually, you gain experience. So next time you don't have to do it manually. Okay. So anyway, so what else are we gonna do? Well, we got CMG, and certainly we can certainly look at CMG, but it's an $800+ stock, and certainly very valid to execute a trade. Actually, very nice. I love those trades, but I'm gonna keep this for the end because my understanding is that most of you, and I'm just guessing this out of emails I received from you guys, okay, and certainly it could maybe a different case for some of you live today or also watching this recorded. But my understanding out of your emails is that many of you are still in learning mode when it comes to using options and using stocks which are $800 would imply that you have a very, very large account, which probably is not the case if you are in learning mode with options, or even if you have a large account, you're probably using either paper money or limited capital for the trades in your initial phases. So therefore, I will pass on CMG, and we may go back to it at the end if we were to find nothing. I would prefer to find something that is actually tradable more easily for most of us. Okay, so PM Philip Morris, that is certainly a valid stock. We got 50 plus probabilities here, so that's looking good. 56, that's looking good. So let's go ahead and check PM when it comes to earnings. That would be February 6th. So that is certainly a nice date because it gives us a lot of flexibility for dates. Okay, and we got multiple UFOs above, and we got multiple UFOs below, and we got a very high number here, 56%. That's pretty large as a probability stat for stocks. You know, stocks are fragile, isn't it? So what about pre-post market? Pre-post market is 53. Okay, so we're gonna stick with regular session. Okay, and all of those are the UFOs that we have above and below. And really, the setup is looking very nice. The key question will be here what the stats suggest and what is the premium that we end up gaining by, looking at those values in the option chain. Okay, so I'm loading PM, Philip Morris. We know we can go all the way to February, but of course, we're going to start looking at January 3. I'm going to right click to analyze and sell an iron condor. As I always say, without even thinking about it, I'm going to switch -5 to be +1 standard deviation and +5 to be -1 standard deviation. And that way, notice we got January 3 expiration here on the bottom center. So that with that date in mind, statistics suggest that Philip Morris will be ranging between 84.6 to 88.2. Okay, so where is 84.6? So 84.6, it's somewhere here. Okay, and where is 88.2? So 88.2 is somewhere here. Okay, so in other words, if you were to stretch your lines to where you find the next two UFOs, we would be dealing with 81.37 if I was to measure the vertical distance from the current price to the bottom purple line. Okay, and I don't need to be that precise to do that, but if I was to measure the distance and project it to the upside, so basically we would be dealing with the next UFO. Okay, so basically price is somewhere in the middle between 81 and 91. Okay, so the question is, if I sell the 91.5, how much I get paid? And I'm pretty sure that using January 3 is going to be very little premium. It's going to be a joke because it's so far out, you get paid 2 cents. Okay, so that's not enough. So what's the solution? Well, the solution is to look at a further date. You can see how January 10 provides premium, which is theoretically 38 cents. But I'm really unhappy to see no bid. Okay, I'm really unhappy because we're gonna get killed on slippage. So even though January 10, I would be okay with that, probably we'll find way more liquidity using January 17. Why? Because notice that we don't have the word weekly, which means it's a monthly expiration date. Monthly expiration date really means nothing. It simply means it's the third Friday of the month. And what it means though is that that's where we normally found the greatest liquidity. Okay, out of it's a tradition. It's where before weekly expiration dates were created, we only had monthly expiration dates and quarterlies, and this is where we found most of the liquidity out of tradition. Okay, so we're gonna look at 91 point something, and here we can see that we do have liquidity now to 9 to 11, but unfortunately it pays too little. Okay, so yeah, it's not gonna work. So I'm gonna have to go for January 24, and January 24 it's providing more liquidity, 11 to 17, but that's still 14, which is little premium. And what I mean by little is that let me show you that. Out of being visual, I'll bring the notes to the screen. Okay, I'm just bringing it right now. Here we go. So those are the notes that we always use, isn't it? So we are normally using expiration dates. We want them to provide at least 35 cents. Okay, and if one side provides more, then we can drop it to 25, but normally we shoot for 35. Well, guess what? This one using January 24 was providing way too little. Okay, so I could use the 31st of January, which technically is a quarter. It's a I was going to say quarterly. That's not correct. That provides 24. So actually, that 191.5 provides 22. Still too little. So really, this is making our life quite complicated. So it seems that I would need to go ahead and use the 7th of February. And if I'm not mistaken, what I said is that earnings are on the 6th. So basically, we cannot do this trade, okay? Because the earnings date, February 7, would surpass the expiration date, sorry, February 7, would surpass the earning dates, which is February 6. Okay, guys? Just give me a second, guys. I need to take a sip. Sorry for that. So anyway, so we're gonna continue and go and check the next symbol. So that was $86 a share. So we can drop now into CSX, which is $72 per share. Okay, so let's do that. And good news about CSX, probabilities are looking good with 50 plus. That's nice. What about earnings? So CSX earnings are happening on January 17. So here we're going to have to use a shorter expiration date, maximum January 17. We do have UFOs above, we do have UFOs below. What about if I switch to pre and post market? 52 becomes 47, which is not good enough. So we need to stick to that one, okay? And to be honest, I'm just gonna skip it, okay? Because price is already inside that UFO. So basically you only have one. The next one would be all the way 80. And given the fact that we cannot use more than January 17 expiration date, we may not get premium enough. Okay, so let's keep going. So we got CL, Colgate Palmolive, $68 per share. So let's check earnings for CL. Sorry for that. Okay, so earnings for CL is January 23. Okay, January 23. And what's nice is that we got a bunch of UFOs above and below. 54%, that's nice too. Pre and post market give us what? 48. Yeah, but in any case, those UFOs are so far away in both cases. With pre and post market, also regular session. If I look at two UFOs above, we're talking about the 74s. And yeah, so that's not going to work. So, well, interesting. So let's keep going. So we are not going to use CL. CSX, we look at it already. We can look at GILD. So this is a patience game, isn't it? The job of a trader, as we always say, is to say no more often than yes. That's how we add probability to what we do. So February 3 for Gilead Science. We got a bunch of green UFOs below. Pre-post market 50%. Okay, that's good. So do we have UFOs above and below? No, I don't think so. So we got plenty of green UFOs below. Okay, yeah, we should be able to find a good setup here. So let me go back to daily. So we should have stuff. We should have UFO starting June or January 19. Okay, so let's do this. I'm gonna go back to minute. I'm gonna go back to first day, January 1st, 2019, and see the UFOs that they have above and below. Okay, so we have multiple UFOs above with 50%. If I use pre and post market, regular session was giving us 52, isn't it? So that's better. So that would be the setup to be used. Okay, but unfortunately, the red UFOs above are not present. We will need to go back in time, and therefore very, very high. So wow, it's not making it too easy for us, isn't it? Now certainly that's a good setup for credit spreads with so many green UFOs, but not for pure non-directional trades. Okay, so let's keep going. Let me switch to my normal amount of candles. The next ones we're gonna have here. So we got 55, 54, 51, 60. Philip Morris, TM, ExxonMobil. So ExxonMobil normally does provide a pretty decent amount of premium. It's a commodity company, and normally that adds a little bit of spice. So let's go ahead and take a look at XOM. Earning date is January 31st. Okay, so that's the date to be kept in mind. That's great. We also have multiple UFOs above and below. Yeah, the next UFO is so far out. Okay, we got 53%. If we use regular session, what about pre-post market? We got 58. That's much better. That is much better. But same story. We are shooting at 74. Again, I just said commodities normally have a little more spice. So I'm just going to have a quick look at the 74 calls to see if we got at least those 25 cents, ideally 35, okay, for the 74. Yeah, so we don't. 73 is 24, so 74 is going to be less using January 24. It's too far. It's too far. So we cannot do that. So we just need to keep looking for, guys. We just need to keep looking for. So next one I'm going to check is Wallboot Alliance. Okay, it's giving us 47% with a pre-post market. Regular session would be 48. 48 is okay. Now, problem, those green UFOs are so far away, so far away. So I'm not sure I'm gonna get paid enough. Okay, so before anything, again, let's look at earnings, WBA. By the way, something for you to know, and I'm sure I said that sometime before, January 8th, that's the date. Right before key dates such as Christmas, New Year's Eve, Thanksgiving, 4th of July, every time you have weekends where you have 3-day weekends, every time where you have holidays in the middle of the week, where basically you have less trading time to expiration, this is normally priced in the options. And basically, no matter what your Greeks suggest, no matter what volatility values suggest, typically when you look at the options prices, normally you got less premium than expected because, of course, the holidays are priced in, and that means less premium. Okay, so just keep that in mind. Okay, and that's why as well we are struggling a little bit to find premium enough. Okay, so January 8th, that is what we need to use with WBA. Yes, so if I was to sell 62s with WBA, so we are looking at 62s using January 8 maximum, so that's going to be January 3. Okay, so 62s, they pay you 6 cents, which is certainly not enough. Okay, so yeah, here's the problem that we're having. So we keep going with the list. So TMUS, okay, T-Mobile, I'm just gonna skip it, just like I'm gonna skip Coca-Cola. Okay, it's there, but I'm gonna skip it. Why? Because those stocks are such stable companies that normally the premiums reflect how stable the companies are, and therefore the premium is normally quite disappointing. Okay, so I'm gonna check MPC. This is another company related to commodities. We do have good stats. That's nice to see. And normally, companies that are related to commodities, as I said before, also give us a little bit of extra spice. So all of this is a nice to have, and therefore we're gonna check. Now, I need to say as well that this is not the most liquid option in the market. So we will see what we see when we get to the option chain. We may see some wider spreads, so we'll have to take a decision about it. But for now, we know that January 29 is the next earning date. Mark, you got fill at 135 with DD. Good job. I'm just seeing that now. Good job. So January 29, that's the value to be kept in mind. We got 53%. That's good. With regular session, pre-post market gives us 51, which is very good as well. But we'll use the best, okay, which is 53. And if I zoom in, we can certainly see multiple UFOs above and below. So we should be able to find a setup, I would say, quite easily here. The key question would be the premium that we're gonna collect. Okay, so if I sell the 62s or the 63s, the question is how much I get paid, and also remember the liquidity. Okay, and also remember we said earnings are on the 29th of January, so we're gonna have to use expiration days which are less than 29, so 24 is the maximum, and the top part of the range was 63.5. And that pays 85. Okay, so it does seem that we have a much decent amount of premium here, and that opens the door for us to plan a trade. Also, liquidity is not so bad, 73 to 97. It's okay. It's okay, not so bad. So let's go for it. So without even thinking about it, okay, I'm gonna start with January 3, okay, which is the shorter expiration date, okay, and we're gonna analyze and sell an iron condor, and we're gonna add the plus standard deviation and the minus 1 standard deviation to calculate our statistical range using January 3 as our first reference date, and that is 58 to 62. So 58 to 62 brings us to here, 58 and 62. Okay, 58 and 62. In other words, we will need to shoot for that UFO and that UFO. That would be the minimum. So if we do January 3, those will be the UFOs to be used, 63.5. So do we get paid enough using January 3 if we sell the 63.5? We get paid 4 cents, so that's not good. I was expecting that. So we're going to go and check January 10. 63.5 does pay 25. It's not ideal, but we can deal with it depending on what we get from the put side. Before I get excited and I look at the put side, let's go ahead and see what happened to the statistical range if I change our date from January 3 to January 10. So these would bring us to 57 and 63.45, which is 57 is above 56 and 63.45 is below 63.61. So in other words, those lines are still located in the right position, those UFOs are still valid, and therefore we got something to work with. Okay, up to this point is looking okay. So let's go for it. We're gonna start building an iron condor to see if we can make it work. The iron condor is gonna be made of buying calls above. Okay, so we need to define which one. Okay, and then we're gonna sell calls, which in this case we already know is gonna be the 63.5 call. Okay, so here it's gonna be, maybe 64, maybe 64.5. We need to determine that. Okay, in the bottom part, we're gonna basically do the same thing, but it's gonna be puts. So we're gonna be selling the 56.5 put, and below we're gonna buy a put for now. Let's call it the 56. Okay, now again, before I get too excited, let's take a look at how much we get paid on the 56.5 put, because the 63.5 call, it's paying us very tight, 65. So the question is how much we get paid with 56.5 put, and it's also very tight, is 24 cents. That is not enough. Okay, I would accept 25 on the call side if I got plenty of premium on the put side, where the two together would gives us a minimum of 70, right? Because if you shoot for 35 per side times 2, that would be 70. So if one side gives me 25 and the other side gives me at least 45, then I'm fine because I get a total of 70. But in this case, I got 25 and 25, which, obviously that's like 50, which is 20 cents short to 70. So that means that I need to move to the next expression there, which is January 17. Okay, January 17. And the problem here is that if I use January 17, I'm going to have to recalculate my range. Oh, that is very interesting. Something got a little crazy there. Let me see. Yes, something got completely crazy there with that value being 14.05. I'm not sure what just happened there. So let me go ahead and go back here and re-enter, analyze and sell an iron condor. And that is a nice one to see. So something interesting is happening here, where it's telling you that from now until January 17, basically it may go from 60 to 258 or from 60 from 14, which probably means that there is some sort of an error in the calculation somewhere. Typically this would have to do with lack of liquidity on those options, but I don't see lack of liquidity here. So I'm not sure why this is happening the way it's happening. So if I was to do January 10, it does show 57 and 63, but if I switch to January 17, it's just going crazy. Interesting. So what happens if I go to 24? Then it's back to do a proper calculation. So yeah, some data, maybe there is a bad tick somewhere or something that is driving TradeStation crazy when doing the calculation if we use January 17. Okay, so what am I gonna do? Well, I'm just gonna go ahead and use 24 and be just a little less demanding here. So 55 and 65. I mean, if I do it for January 24 and I use January 17 expiration, it's going to be even better, right? And if it doesn't work, I'll just give up. Okay, so 55. Okay, so 55 is going to be here. Oh, sorry, I'm just moving the text. I didn't want to move the text. I wanted to move the line. So 55 is more or less here. So I'm going to go for the next UFO. And the upper one, instead of 55.42, is going to be 65 something. So I'm just going to go for 65 something, and therefore I'm going to bring this to be that UFO, which is 66. Okay, so now the question is, using 66, if I use 66, how much I get paid using the 17? Okay, well, if I use the 17, I get paid 23 cents, which is not enough. And on the put side, 53.5, I get paid 15 cents, which is not enough. So basically, I have to take this trade using January 24. We said that earnings are on the 29, so 24 is still valid, and I believe that should work. If I do 66, I get paid 36 cents, as you can see. And if I do 55.5, I get paid 50 cents. So yeah, so that looks to me valid. Okay, that looks to me valid. So let's go for it. So we're gonna do 66 and let's go with 67. I can always adjust that later on. And on the bottom side, we're gonna do 53.5 and 52.5, something like that. I will adjust that in a minute. Okay, that would be the range that we're going to be playing with this iron condor. Okay, this is an iron condor where we're using Jan 24, 2020 expiration date, where earnings are Jan 29. Okay, earnings Jan 29. Did I say that correctly? Yes. Did I say the date correctly? I believe so. Yes, 24. Good, perfect. Okay. So, by the way, I'm just noticing I was making a little mistake there. 53.5. I get paid 26. That's not enough. And 66, I get paid 36. That's enough. But 36 and 26, it's not enough. Wow. Challenge, my friends. It's not good. It's not good. By mistake, I was looking at 55.5. So I was looking at 52. That was nice. But really, we need to shoot for the 53.5, which is 26. And that is not enough. Yes, and that is the number, 53.5. I don't have a UFO here anywhere in between, so I cannot do it. So let me see if I can readjust it, because remember, pre and post market was also giving us good data. Well, we could go for 54. It would not be crazy to go for 54, but still it's not going to work, because 54 is giving us 29, which is still not 35. Okay, so yeah, so it was really looking like we had a trade here. We just need a little extra premium that we don't have, and therefore this trade end up not being valid. Okay, so next one, I'm going to check the next one, and I believe that's probably going to be the last one, because we have surpassed the session by 20 minutes, which basically was the amount of disconnection I had, and I want to be respectful of your time. So we have MedLife, LUV, probably LUV, yes, LUV. So let's take a look at LUV to see if we have a good setup here or we don't. Okay, we should have UFOs above and below. Let me see. So if we switch to regular session, 48 becomes 53, and we have UFOs below and we have UFOs above. Unfortunately, the UFOs are very far out, so yeah, that's likely going to be wasted time. So I'll check the last one, MedLife. MedLife showing 50.57. That is fine. Are we making all times high? No. So when was the last time we were so high? That was January 18. Okay, so I'm gonna have to load data all the way to January 18. Okay, so pending data all the way to January 18 to get our UFOs on the screen and get to see the red ones. I'm expecting to be above. We only have one here, 52.48. Pre-post market would give us 47, so that's not good. Yeah, so we will need to go with the 42.48, but we only have one red UFO above, no matter how much I squeeze the chart, and that, as you know, it's not enough. Okay, that, as you know, it's not enough. We need a minimum of 2 UFOs above as well as below. Okay, so not working the way we would like. So yeah, so basically we are concluding the session today with the DD trade that we planned earlier. Price went into the red UFO. A few of you got filled, isn't it? Dirk, Mark, and from there started dropping. And based on climate and UFOs and everything else, we should see a continuation of this price action traveling towards the target. So hopefully that is the case. And if not, what's your maximum risk, isn't it? You got filled at 135 mark, 136, Dirk. So that's your maximum risk. And from now on, it's all about trade management. Okay. Cool. Okay. So let me see. Final questions, comments here. Mark, you have 64.96 above and 55.88 below. Unfortunately, I'm reading your message now, Mark, and maybe this is when I was earlier looking at the stats and so on, and I missed your message. So I'm not sure exactly what you meant by those values at this moment in time. So I don't know how to use those values right now. Okay, but anyway, unfortunately, the premium was not valid, so we cannot really do much about this trade. Okay, sorry for that, guys. I have a little bit of a itchy throat today, so I had to take a sip from time to time. So anyway, so we are done with the session today. My friends, it's exciting times in the sense that we are concluding a year and getting ready to start a new year just in a few days from now. So it's exciting times. You probably remember too that I said the other day that we were going to. Interesting. I just see a pop-up window here. Here we go. So I said as well that on Sunday we're getting together for sharpening purposes. It's going to be an important session. We're going to be talking about 2020. We're going to be talking about planning for the next year. Next year is going to be an exciting year. I mean, it's always exciting to trade, right? We love it, and it's always, it makes us better as people, as a person, to get into trading, to better yourself, to accept the challenge, and improve every year. As I said, as a professional, as a person, as a trader, because it's all linked in the end. But also for us, specifically with the UFOs and technology that we exploit, etc. As Tradictive, as a company, we are very excited as well for what's coming next year. Okay, so we have plenty of new tools that we're gonna be exploiting together. Lots of additional sessions, additional coaching, additional all sort of things. We've learned a lot about what your needs are this year by working together on running sessions together, etc., and getting your feedback, your emails, everything else. And therefore, hopefully, we've done a good job listening to you actively, proactively, and building and putting in place tools for the next year to take everything we've been doing to the next level, and of course, your trading as well. So, to me, it's very important that you are part of the session on Sunday to kind of have a little bit of a recap, to talk about the plans. Remember, we had a little bit of a homework that I set last sharpening session a couple of weeks ago, and so we'll be looking at your homework that you have done when it comes to the plan for 2020. We'll be talking about that and everything else. Okay, so make sure you attend, ideally live. Certainly, if you cannot make it live, you can always attend recorded and send your emails either before or after the session or both. But it would be important that we are all together that session, just to have a proper goodbye of the year, getting well organized for the years to come, and also for me to get your feedback live, because sometimes when you guys send an email, um, there is so much you can say in a message, and also most importantly, my interpretation sometimes could be the right one or may not be the right one. So if you were to phrase it either in an email or in a message on the chat box during the session live, and I was to explain to you in the session live what my interpretation of your need is, and I was not to get you the right way, and you were to kind of give me the opportunity to fully understand what you mean or what you need, then certainly I would be able to help more, into 2020, and help you unlock your potential. Because certainly the ones of you that have been part of the sessions, especially the ones that you are interacting in a regular basis, the one that you are shooting emails to us in a regular basis, etc., basically that gives me a feel of what your level of commitment is, which is great. But also some of you have been struggling and now are fine, but some of you have been struggling and still struggling, and many times is because of something that you have not fully understood yet when it comes to the method. But most of the times it's not the method or the tools. Most of the times it's us being human, is the trading psychology and so on. So I need to make sure I get you, so I can put in place the tools to unlock your potential into 2020. That's the plan. And therefore, I urge you, if that's okay for me to say it this way, I urge you to join me on the Sunday session. And if you cannot, at least shoot me an email with what it is. So I will phrase it in the session so you get to hear me say it when you watch it recorded, so you can correct me if I didn't get you right. So again, I can help you better into 2020. My commitment is there, but it's a matter of communication now, putting on the side our commitment, which it is there, okay, from our side and also from your side being there. But at the same time, communication is key now to make sure that we understand each other to be able to work together as a team to unlock your potential, because potential is there, but we have to unlock it if you are not there yet, okay. And for the ones of you doing well, of course, we can help you keep doing well, because once you reach consistency, the key now is to keep consistent, because other challenges will show up the moment you get to consistent. The first challenge of a trader is to get consistent. Second challenge, once you become consistent, is to stay consistent, okay. Many things happening in the back of our mind at the subconscious level will impact you once you become consistent, okay. Things as simple as, if it's okay for me to use a strong word, getting cocky, or overconfident, or arrogant, or greedy, because now you see the money, right? So now you get greedy. So many things happen. We are all human, and again, it's important to work in a team, well connected, to keep doing a good job. Okay, so one more time, see you on Sunday. It's going to be the last session of the year. I'm counting on you to be there, and if you cannot make it, watch the recording. It's going to be an important session, guys. In the meantime, wishing you the best for the remaining part of this very special holiday season in the year. Make sure you enjoy the family and your personal time, and take it easy in the markets. Liquidity is less, so don't be too tough on the markets or yourself. And if there is no opportunity, it's okay. There will be plenty into next year. Okay, take care. See you soon. See you on Sunday. Bye bye.